Have you ever wondered who controls the ebb and flow of the stock market? Well, it's not just one entity or person, but a collective force of investors worldwide. And within this vast arena, two powerful creatures dominate: the bulls and the bears. The stock market, a critical component of the global economy, is their battleground. It's a place where fortunes are made, lost, and sometimes recouped. It's a world of high stakes and high rewards. Now let's meet our gladiators. First, the bulls. They're the optimists, the ones who believe in the market's potential to grow. When the bulls charge, they push the market upwards, indicating a time of prosperity and growth. Then, we have the bears. They're the pessimists, the ones who foresee a downturn. A bearish market is often a sign of caution, a time to pull back and reassess. So, these are our gladiators, the bulls and bears. But how do they battle it out? Imagine a coliseum, the stock market, where bulls and bears fight for supremacy. It's a fierce combat, a spectacle of strategy and strength. It's the epic struggle that shapes the world of finance. On one side we have the bulls, the symbol of optimism. They charge ahead, fueled by confidence and a positive outlook. They're the ones who see a bright future, who believe in the potential for growth. They're the driving force behind market rallies, pushing prices higher with their bullish bets. When the bulls are in control, we see a rising market, a surge of activity, a flurry of buying. But it's not a one-sided battle. Opposing the bulls are the bears, the embodiment of caution. They pull back, reacting to uncertainty and risk. They're the skeptics, the ones who see potential pitfalls and warn of a possible downfall. They're the counterforce, the check on unbounded optimism. When the bears take over, we see a falling market, a slowdown in activity, a rush to sell. This struggle isn't just a spectacle, it's a reflection of investor sentiment. The rise and fall of stock prices aren't arbitrary. They're a result of countless decisions made by investors, swayed by their perception of the market. A surge of optimism can send prices soaring, while a wave of pessimism can send them plunging. But the market isn't just about sentiment, it's about cold, hard facts. Economic indicators, corporate earnings, geopolitical events. These are the facts and figures that guide the actions of the bulls and bears. And it's not just about raw data. It's about interpretation, the art of reading between the lines, the skill of making sense of complex information. This epic struggle isn't fought in isolation. It's watched closely by experts who provide valuable insight and commentary. They dissect the actions of the bulls and bears, interpret the underlying data, and guide us through the complexities of the market. This relentless tug of war between optimism and pessimism, bulls and bears, shapes our financial world. But what happens when the dust settles after the clash of these titans? Well, the aftermath of this struggle paints a fascinating picture. The oscillation between bullish and bearish sentiments creates a dance of market volatility. This volatility, the rapid and significant price shifts, is a double-edged sword. On one hand, it can be unnerving, shaking the confidence of even the most seasoned traders. On the other hand, it's precisely these fluctuations that create golden opportunities for investors. When the bulls charge, optimism abounds, and stock prices rise. Conversely, when the bears take the reins, pessimism takes hold, and prices take a downward turn. This tug of war, this ebb and flow, is the lifeblood of the market. But remember, each swing, each shift, carries potential rewards and risks. The key is to navigate this battlefield with wisdom, understanding that sometimes it's the bulls' day, sometimes it's the bears'. Whether the bulls or bears win the day, the market's battlefield is forever changed. So, what can you, as an investor or a curious observer, take away from this epic battle? Well, let's delve into that. The stock market is like a grand arena, where bulls and bears lock horns, each striving to tip the scales in their favor. Bulls, with their optimistic outlook, drive prices up, while bears, the pessimists of the market, push them down. These market dynamics are influenced by numerous factors, including economic indicators, corporate earnings, and even global events. The struggle between the bulls and bears shapes the market, creating opportunities and risks alike. It's essential to comprehend these forces to navigate the stock market successfully. The consequences of this battle? They're far-reaching, affecting not just individual investors but also the global economy. So, whether you're an investor or simply intrigued by the market's ebbs and flows, understanding the roles of bulls and bears is crucial. Remember, in the stock market coliseum, knowledge is your strongest armor.